Hello folks, welcome to the Market Internal Review for June 13th, 2023. We're going to take a fast look here. We had a gap up on SPY after some relatively positive economic news. We did see a strong buy breaking that first standard deviation high, only to give up the session TWAB established value here early in the morning, just to break down the low standard deviation, breaking through a tick level that we created in the morning, and a rather thick one we made, roughly speaking, right near the open where the volatility is the most high. We did have a rather bullish add and volt bands, but you can see the 20 SMA trends were flipping off and on, and trend itself was showing potentially a balance. So even though we had these extreme tick highs and a couple of low, somewhat medium breakouts, we weren't seeing a lot of follow through. You can see this cluster of tick highs was actually a lower price than the ones early in the morning that sent us rocketing past that first deviation. Then as we get towards the midday session, we're really starting to show some weakness. Our tick average closures are going below the zero line. Trend is showing an imbalance, which would provide potential headroom for some moves, some trending moves, but it didn't really manifest here in the indices. So we're not seeing very good alignment. We have to, if we're going to try to trade this, we're going to have to use the tick levels and the TWAP and try to align as much as we can to the overall sentiment, although that definitely was challenging given that we were seeing all of these 20 SMA reversals on the internal add and volt. Flipping over to Qs, they had a lot more weakness in the morning. They never really saw that buy spike that the SPY had. Once they lost the session TWAP, they saw a similar sell-off that SPY did, but I would say it was a complete sell-off of the entire gap that we had in the morning. So I would say overall tech is probably weaker right now, not really holding that value despite semi-positive economic news for the CPI. Russell had a rather strong buy, so mid-caps apparently are slightly stronger perhaps, and more traditional value stocks in the Dow, not really seeing much more than what SPY saw. Classic range type setup here. Heading over to tick, we can see the consolidation much the same as the MIT indicator shows. A couple of extreme breakouts here in the morning session, only to lose it over to the bearish side of the neutral range in tick, where we then see a couple of bearish lows here at the extreme 800 to negative 1000 area. And then we continue to oscillate for the rest of the day in that neutral zone, only having a few breaks. So your indication for range, if you're somebody that waits to get into the market until about midday, your indication for range is when we have these tick highs and lows on either end of the extreme range. So unless there's a strong V after this, you can most likely expect more of a range type day into close. Looking at trend here, we can see that balance that MIT indicator was showing us with some rather extreme candle printing here. Clearly something big is going on in add and volt to create such a dispersion here on these candles. Large gaps as it breaks down into the surprisingly bullish zone here. But we see that it didn't keep that 20 SMA past 1 p.m. Eastern time. We actually started to ascend back out of the bullish zone. Rather interesting that we didn't really see this kind of extreme bullishness come to fruition on the indices. The raw chart for add, extreme buy up into the strong bullish zone here. We started with about 1,200 stocks in the New York Stock Exchange already gapped up in advancement. See a strong buy here. So just a load of NYSE stocks are seeing advancement in price. Then we see perhaps what could be considered profit taking and an overall downward trend for the rest of the day. Volt, on the other hand, saw something quite dissimilar from the add. We have a balance volume open and just an extreme amount of volume pouring into the advancing stocks of the New York Stock Exchange to such an extreme high that we usually don't see. Since SPY did not match this kind of movement today, neither did Q or Dow or Russell. I'm going to guess that tomorrow's session is probably going to see some sell-off, but anything is possible. They could just continue to buy into FOMC. We'll have to just play it by ear. Taking a look at the weekly TWAP, we held that first standard deviation breakout area on weekly TWAP. We oscillated around it only a couple times, but every time we bounced today was right on that upper deviation, save for here at the end of the day. And the monthly, we've now, with this gap up, we have broken out into the, let's see, first, second, third standard deviation move off of that monthly anchored price for June. So incredible buying. Just by this, I would expect some kind of selling, some kind of profit taking, but who knows? Take a look at Qs with this. Okay, Qs, same thing. Really extreme open per the standard deviation setup with the monthly TWAP. Bounced right on this line here, incredible, and oscillated within. That rejection was right on the line, twice actually. Really fascinating to see this. Just more demonstration of the effectiveness of this indicator and anchoring of the various time frames. Monthly seems to be quite effective as well as weekly. Very neat. Okay, folks, I'm going to go ahead and wrap it up here. Not much more to say other than I'm going to come in tomorrow with the same setup I do every day. I'm going to watch the market internals. I've got a little bit of a bearish bias, I guess you could say, but I'm going to just take whatever the market throws my way and try to do my very best to capitalize on opportunities as I see them. Hope you all did well today. Hope you're doing well in the week, and thank you for watching. Happy trading.